Ethics and financial integrity are crucial components of any successful business. These principles not only ensure compliance with legal standards, but also build trust with stakeholders, including customers, employees, and investors. Hey, welcome to another enlightening episode of the Abraham's Ideas podcast, where we explore strategies and insight to empower you in your personal and professional endeavors. I'm your host, Abraham Mas. To our new listeners joining us for the first time, I say a big welcome to you. This is Abraham's Ideas podcast. Don't forget to subscribe and hit on the notification bell so you don't miss out on our new episodes. When financial practices lack integrity, the consequences can be severe, from legal penalties to the collapse of businesses. This episode explores the importance of financial ethics, how to foster a culture of integrity, and examines notable case studies of financial fraud to draw valuable lessons. Let's look at the importance of financial ethics in business. Financial ethics refer to the moral standard and principles that guide financial decision-making. This standard helps businesses navigate complex situations where profitability and ethics might conflict. Trust and reputation. Trust is a business' most valuable asset. When a company demonstrates ethical financial behavior, it builds credibility with stakeholders. Trust leads to long-term relationship, customer loyalty, and a positive market reputation. Conversely, unethical financial practice can damage a company's reputation permanently. Legal compliance and avoidance of penalties. Financial ethics ensure compliance with laws and regulations. Governments impose strict financial regulations to prevent fraud, money laundering, and tax evasion. Violating these laws can result in severe penalties, legal battles, and business closure. Investor confidence and shareholder value. Investors are more likely to support companies with a reputation for integrity and transparency. Ethical financial practice increases investors' confidence, leading to stable investment and higher shareholder value. Employee morale and organizational culture. Ethical financial practice creates a culture of honesty and accountability. Employees working in such environments are more likely to demonstrate ethical behavior, feel valued, and remain loyal to the organization. Long-term sustainability. Short-term gains achieved through unethical practice often lead to long-term consequences. A commitment to ethical finance helps businesses achieve sustainable growth, as stakeholders prefer to associate with companies that prioritize integrity. Now let's look at building a culture of financial integrity. Creating a culture of financial integrity requires consistent effort, effective leadership, and clear communication. Here are some strategies for establishing and maintaining such a culture. Establishing a code of ethics. A well-defined code of ethics outlines the company's values, expectations, and ethical standards. It should include guidelines on transparency, conflicts of interest, considered trading, and accurate financial reporting. This code must be communicated to all employees and reinforced through regular training. Leadership commitment. Leaders must exemplify ethical behavior. When leadership demonstrates integrity, employees are more likely to follow. Leaders should prioritize transparency, honesty, and fairness in their decisions and encourage the same among their teams. Training and education. Regular training sessions help employees understand the importance of financial ethics, recognize unethical practices, and respond appropriately. Training should address topics like fraud detection, bribery, and legal compliance. Whistleblower protection. Establishing safe channels for whistleblowing encourages employees to report on ethical practices without fear of retaliation. Effective whistleblower policies demonstrate a company's commitment to ethical behavior. Internal controls and audits. Strong internal controls and regular audits reduce the risks of unethical financial practices. These measures include monitoring transactions, separating financial duties, and maintaining transparent financial records. Accountability and consequences. Holding individuals accountable for unethical behavior reinforces the importance of integrity. Consequences for violations must be clear, consistent, and enforced without bias. Now let's look at case studies on financial frauds and the lesson learned. Enron scandal, 2001. Enron, once a leading energy company, collapsed due to accounting fraud. Executives used loopholes and special purpose entities to hide debt and inflate earnings. The impact was that the scandal led to Enron's bankruptcy, significant financial losses for shareholders, and the desolation of Arthur Andersen, its auditing firm. The lesson learned is that the need for stringent regulatory oversight and transparency in financial reporting. The importance of independent and honest auditing, and also lastly, accountability at all levels of management. Lastly, let's look at Bernie Madoff Ponzi scheme, 2008. Bernie Madoff orchestrated the largest Ponzi scheme in history, defrauding investors of approximately 65 billion USD. Madoff used funds from new investors to pay returns to existing ones, creating the illusion of profitability. The impact was that the scheme collapsed, led to widespread financial ruin for thousands of investors. The lesson is that the critical need for thorough due diligence and skepticism in investment practices, the importance of independent audits and oversight. Lastly, the risks associated with over-reliance on reputation without verification. In conclusion, ethics and financial integrity are foundation to a business's reputation, sustainability, and growth. Companies that prioritize financial ethics not only avoid legal consequences, but also gain the trust of stakeholders, which is essential for long-term success. Learning from past financial fraud cases reinforces the need for vigilance, transparency, and a genuine commitment to ethical practice. This will be the end of today's podcast. Don't forget to subscribe if you haven't. Thank you for listening. I'll see you in the next episode.